This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and today we're very pleased to welcome on Kenny Rose with FranShares, kind of an interesting concept of investing with franchise agreements. We had an episode maybe about 4 or 5 weeks ago covering kind of the broader topics on franchising and investing in those types of deals. And you all seem to really like it. So we're really happy to have Kenny on today. Kenny, thank you very much for being with us.
Oh, thanks for having me on, Alex. Excited for this.
Yeah, great. So maybe give us a little bit of background. I know a lot of colleges don't offer degrees in franchise development, just like they don't offer things in real estate. So we always like to find out how people kind of come to be in this particular industries and the industries that they are located in. So give us a little bit of background about yourself and kind of how you came to get plugged in with what you're doing now.
Definitely. Yeah. There's never like a one size track for how you get involved in the franchise world because it's a very random industry to be involved in. And so when I was in college, like you said, no major in franchising. So I was doing financial services there over at San Diego State. Graduated and ended up working at Merrill Lynch as a wealth advisor. And I was doing it at San Francisco at the time. So I saw robo-advisors coming along and I was a little worried about the long-term health of that industry. So I wanted to see what else was out there, and I actually talked to a family friend. He was the CEO of a company that coaches CEOs, and so I'm like, great person to talk to find this like next step in the career. And then he threw me an absolute curveball. He's like, "What do you know about franchising?" I'm like, "McDonald's, Subway, Taco Bell. Like, well, what do you know about franchising? Why are you asking?" I was surprised to find out his company was a franchise. I had no idea that there was a franchise for coaching CEOs, and honestly, hundreds of other industries that I now know about from it. And so I was so intrigued that it was such a large industry, like almost $1 trillion, that like a college educated person doesn't really know that much about. Like they know of them, they don't know much about it. And so I decided to hop into the industry. I was on the franchise brokerage side. So things sounds very much like the guest you had a few weeks ago, where basically like being a realtor or an investment advisor for helping someone find that right franchise. And so spent a number of years both with one of the world's largest brokerages and eventually starting my own. And wanted to become really a thought leader in the space. I started writing about it on Quora, free stuff for question and answers, and then reached out to journalists. And eventually, I found myself in Forbes, ABC, Business Insider did a whole article on my work in the industry. So reached over 300 million people without any ad spend there. And eventually, I had this idea of like, people want to invest in franchises. They just don't normally have 6 or 7 figures of cash laying around, or they don't want to leave their full-time job, or they don't have the right skill set. There's a lot of reasons why a franchise might not be right for you, but you still want the investment side of it, to be able to have equity in it, to earn passive income, and really diversify your portfolio. And so that's why we created FranShares as the very first platform where you can fractionally invest in franchises. So as little as $500, own a piece of a portfolio of different locations across the country.
Great. So let's kind of, again, just because this is a little bit of a newer topic for a lot of people, let's, give kind of like the 30,000 foot view. So a franchise is basically an agreement to license, services, workflows, marketing, a lot of other stuff from a parent company for a business that you are going to set up and establish. So, kind of fill in a few blanks of saying, okay, in your eyes, what exactly is a franchise?
You actually did a great job of explaining it, but I'd say the simplest way, it's a business in a box. And I phrase it that way because, a lot of people think of franchising as just fast food. It's like, oh, I'm getting access to the golden arches or like that super secret sauce formula. But for other industries, that franchising covers things like home services, business services, waste management. Like those aren't things you're going to recognize the brand name at all. But you're getting this business system, the business in a box, where you're able to know how you go to market, how you grow it, how you scale it. And so it's really like how you skip that first 5 or 10 years of figuring out how to start and grow a business.
Yeah, absolutely. And, in my, professional career, I was the investing side of it, not so much, but the exposure to different types of franchises, coming into my professional financial career, like the, what's it called? Home investors, the people with a little caveman. Yep. It's like We Buy Houses. I had no idea that was a franchise, and I've been to a few of their conferences. I've also gotten plugged in and actually had the CEO of Spalding Decontamination, the people that make the viral crime scene cleanup videos. They're
yeah.
I've been a speaker at their national conference and their franchise conferences as well. So, yeah, I mean, again, like you said, it's not just the golden arches. It's things like, cleaning up meth labs and crime scenes and waste management and buying dilapidated houses and, yes, also fast food. But it's that's kind of one thing I at least wanted to get across to people, is that it's not just, a Subway, a McDonald's, a Taco Bell. It's all sorts of other interesting businesses. And the point of that being is that there's a lot of areas for growth and ways to make money with this. We talk about alternative investing. It's not just a one-track thing. There are tons of different industries that you can get involved in, and they can be adjacent to what you do personally and professionally as well. So you don't have to necessarily kind of reinvent the wheel and learn a whole new scope of things. And again, franchising helps with that development side of things to get that business in a box. But to go back to what you said, franchises are many things, but getting into one is not inherently a cheap endeavor. You're going to have to, for your initial franchise is going to probably be, I'd imagine the low end is they probably don't get much cheaper than maybe $20,000-$30,000 on like the real low end.
Yeah, I'd be very careful with the ones that are that cheap too, because a lot of times if you start checking out franchises, you'll see things like, hey, franchise for as little as 25, 30, but a lot of times that's just the franchise fee, and it's not really the total cost to get started, like then all the training and marketing and things like that. So, I mean, realistically, like I wouldn't really say a decent franchise could be had for like less than 100,000, and that's like the total all in. So usually they'll do a fraction of that and finance the rest. But
yeah. So again, to the point of there are many things, but not cheap. You have to have a capital outlay that's going to support that, and that's just the check you have to stroke to get it. It's just like any businesses. You got to buy office supplies, you got to, overhead. There's a lot of different other things that go into starting it, other than just being like, hi, Mr. Franchise Man, here's $100,000. I would like my business now. Where's the keys? So, again, that's kind of, the point of what a franchise is, what it can be, what the, again, 30,000 foot high level view of it is. It's expensive, business in a box. So what you've done is, again, one of the reasons why I really wanted to talk to you, and an interesting concept is bring that down to, for lack of a better term, a micro level. For the investors that like the concept and everything else like that, to be able to invest on a much smaller scale, and what I would imagine against a more broad and diverse portfolio of franchises. Not a lot of people, it's to be able to invest in 5 different franchises. It's $500,000, $750,000, a lot of money, but to be able to do that on a smaller scale is definitely attractive. So maybe break down kind of how you initially kind of developed a system for that. Because again, in my mind, thinking about a franchise, it's one person or a group of people or a business that buys the contract, buys the franchise agreement. So how does it work if you're kind of, again, diluting, again, terms I'm using are just the best ones I can come up with. But kind of, you have a diluted pool of investors. So how does that kind of work when you have a bunch of people doing it on a crowdfunding type platform?
Yeah, so it's really like there's 2 sides to it. It's the people investing and who we're investing in. Because when it comes to like the franchise world, there's really a big separation between where the money comes from and who are actual hands-on operators. If you were selling McDonald's franchises and you had this guy who was a GM at Burger King for 10 years, wants to be a franchisee, you're like, oh, that's the perfect person who should be a franchisee, but they're not going to have $2 million laying around. So like, there's people like that and franchisees who bought into a couple and are ready to scale that just aren't your traditional lending type people. And so that's what we're trying to fund is those type of franchises. And for the investors that come along, if you're familiar with like platforms like Fundrise or Masterworks for real estate art, it's the same idea for franchising. And so you're buying into a fraction of the franchise or portfolio of them. And so you get both the equity component of it. So they're eventually sold, you get your pro rata share, but then you're also getting your portion of the income from the business. Because that's something that investors are really looking for, these like passive income streams that are also like things that you can understand. And so, you get those 2 components together. And the average advisor is telling you should have like 20% of your portfolio in alternatives, but there aren't really more alternatives out there. People are kind of going again and again and again into real estate. And so that's why we see this as like a great alternative or complementary investment for them to get into.
Yeah, it always bugs me when people say, they say, oh, alternative investments, and they mention real estate. I'm like, it's like how few things could be less alternative than investing in land. It's
Yeah.
like, what do you think empires were built on? Like, it's like the British Empire. It's like land, East India Trading Company, and they owned property. So I always kind of, thought was interesting. But the business ownership concept. Okay, so we have this thing where you have a pooled group of investors and then they're getting some type of income stream and equity in the business. Now, does this differ between different types of franchises? Like, let's say just pick any franchise. Are they going to be different in the fact that the franchise owns the underlying real estate? Is it just going to be like an IP that they're buying into and getting kind of like being like a secondary franchise, or if you will, kind of getting that franchise agreement back in? So how do cash flows kind of work with that? Where does it derive from? And obviously, with operating a business, having way too many chefs in the kitchen could be problematic. So how are the things broken up between like the operator and the owners in this fractional share kind of structure? Like, how does that all kind of work out?
Yeah. So so there was I'll start first with how the operators, the investors interact. So when we're talking about those type of investors, they're not looking to get their hands involved in the business. They want something that's more of a passive asset, and the operators are looking for, again, a funding source. So we surround the operator with resources to help them maximize the income of the business. And then again, as they cash flow, the extra dividends are paid out to investors. But what's really cool about what we're doing is that we also prioritize local investors for each investment. So, I live in Chicago. If we're opening up Chicago locations of something, we prioritize Chicago investors because those investors, even though they're not going to be active in the management of the business, it's still something that they love to have nearby. It's tangible, and you can be a customer of something that you own a piece of. And you're always going to go to that franchise. You're going to tell your friends to go there. So it's both like you're contributing to your investment as well as helping that franchise grow even more. And then to your other question, when it comes to the different types of franchise investments that we'd make, we're really focusing primarily on the actual franchise businesses themselves. So not underlying IP. Eventually we'll do real estate, but it's really what's the actual cash flowing business that we can invest in. And so sometimes that'll be new locations, sometimes that'll be existing ones. You can be working with new owners or existing owners looking to add new locations, roll up other locations. So as long as they're the business side of it, that cash flows and can be paid out to investors, that's what we're looking at.
Okay. Yeah. So from what you said right there, I kind of have two questions. The first path I want to go to is from the investor side. Now, okay, so I understand kind of, where the cash flow is coming in, how this thing's kind of working. Now, from an investment standpoint, what exactly would an investor be buying into? Is it something like a limited partnership? Are they getting paid out on K1? What are some of the kind of inherent benefits that the, investor gets? Cash flow is great, but, it's not about what you make, it's what you take home. So is there any type of, is there any type of tax advantage to doing it in this way? Are there write-offs that get passed through? Because one nice thing about businesses is that they generate losses and different kind of things that can help to offset income. So from an investment standpoint, besides the fact that you get to invest, in a very diverse array of things, which is one of the nice things that the Jobs Act did in creating crowdfunding allowances for people that aren't accredited, what are some of the kind of additional tax benefits, or are there any, that kind of come through? If someone says, hey, what does this look like for me as the investor when I get it back? Maybe you could kind of flesh that out a little bit.
Yeah, and so different portfolios are going to have different advantages. Typically we try and keep the write-offs on the company level, so that way we can maximize the payouts that we're giving back to investors, which we typically do on a quarterly basis. Portfolios that don't involve food could actually qualify for QSBS, or qualified small business stock, which is especially helpful when you eventually sell the franchise, because then you've bought in stock in a small business, and I believe it's that you don't actually have to pay any capital gains taxes on it. And we're working on new ways that we can create more tax advantages. Like REITs have tax advantages, and we're basically a REIT like we develop REITs for franchises. And so, we'd love to be able to create some of those. So, there's a few advantages now, but we expect there'll be a lot more later on because when you're looking at like creating new tax breaks, one that creates jobs and new business owners and funded by local investors, like that's exactly what Washington's looking to create those things for. Frankly, we have more reason to get tax advantages than real estate.
Oh, that's awesome. So from that point of view, then, so like with the underlying investment, then you said, qualified small business stock, but would it also be something like, would it be like shares of a C Corp, like a master C Corp that you're buying into, or like what would the actual investment be if it's not kind of a qualified small business stock acquisition?
Yeah. So again, depending on the type of investment, we can do it in different ways. So like if it's something that's looking to qualify for QSBS, typically you'll have like a C Corp on top. But if they're not, typically we'll do something where like the C Corps hold the franchise investments and then those funnel up into an LLC. And so, spend a lot on tax attorneys to find out all the best ways we can do this. So we've got some good ones now and more coming down the pipeline too.
Yeah. And the reason I ask about that is specific to what we do here, for new listeners, we do this as an adjunct to, what we do professionally at Advanta IRA, which is investments in alternative assets with qualified retirement plans, IRAs, 401ks, HSAs, all that fun stuff. And there are some specific issues when investing those types of plans into active trades or businesses. But one of the tax issues that gets blocked is when C Corps are involved, or you're not in, an equity position in an active trader business. So that was kind of the reason I was asking about, if there's a C Corp involved, because it makes it a lot more attractive to qualified investors where, you can use your IRA or 401k to invest in something like this. And you don't have to worry about things like what are called UBIT and UDFI taxes, which is an incredibly boring topic that I can expound on for hours, which I've actually done a couple podcasts on and done like 2-hour webinars on. So if you're interested, it's out there. But that's kind of cool that is structured in a way to where it kind of makes a very broad, it's very attractive to a very broad array of investors, not just your, civilians and your, rank and file, but also, retirement plans and other things that can really help people not only take advantage of interesting avenues for diversification, but also be able to diversify more of their pooled, their funds that they have available. So
yeah,
that's really kind of interesting from that point of view of, how these things work from the investment side. Now, as far as life cycle runs of these, is it, kind of a long-term play, or is there different strategies depending on different types of franchises? I mean, you mentioned, a sale or an acquisition. And I know a lot of times in, startups and different things, it's the IPO or the acquisition. There's some similarities, I guess, between the two, but maybe talk a little bit about strategy with this. Obviously, cash flow is awesome, and I'm a big proponent of investing for cash flow. Because if you invest on the dollar for tomorrow, you're going to lose 2 today. Is kind of how I see it. So investing for cash flow is an important thing that I like to put out there to clients to really look at. And it sounds like that's kind of, a core component of this. So maybe talk about strategy. And, obviously it probably varies from investment to investment, but what are some core components of that?
Yeah, we definitely like to do varying different types of investments. So like there'll be, just like you have growth funds or income funds, we'll do similar types of strategies there. Because if you're doing something like buying an existing location, it's going to cost a lot more than doing something from that's new, but you're going to cash flow a lot faster. Versus if you start new locations, it takes time to build and time to scale, but then you've got a ton of equity growth. And then you get the income component on top of it. And so it really depends what their investment horizon is. I like to tell people anyway, like always plan on it being a long-term investment. Like I'd rather people be over prepared for it than like invest too much and try and have to take something out later on. And we definitely see another direction of like, besides working with just these groups, like how we also work with like individuals, family offices, private people just in general don't have access to this as a investment class.
Yeah, no, it definitely is something I was very surprised with the initial interest that we had. that they reached out to us, say, hey, we'd like to be on the podcast. And I'm like, I'd like to learn more about franchises. And just how many people were interested, I think kind of lends to that, is that, people are very interested in this, but the barriers to entry are high, and being able to invest on this level is definitely interesting. Now, to the point of some of the investor questions I have, what's kind of like, is there a lockup period for this stuff? Is there redemptions? What kind of liquidity is, are these highly liquid assets? Are they transferable, sellable? Like, maybe give a little bit, if like kind of from the investor point of view of what they can expect when they invest on the crowdfunding level with franchises.
Yeah, great question. So again, depends on the type of portfolio we're doing, because there's some where there's a 1-year lockup and then you're able to trade, and we already have a trading platform set up. And then there's other types that allow you to immediately trade, and those are typically reserved for like larger raises. So we'll be doing a bit of both. I always tell people, like, yes, the platform, like our trading platform's there to facilitate liquidity, but again, I prefer to over prepare people. It's someone's got to be on the other side to buy it. So while we have, we've got 41,000 people on the wait list right now for future offerings. So like, we do expect that you would be able to, trade pretty quickly with people. But again, over prepare, it's like, you should invest what you're prepared to hold for the long term. And we'll be offering redemptions probably within the next few months, and in case there is like an emergency and you need it. But I just like tell people, like, hey, we don't need one giant check from you. Like, go ahead and test us out. We're here for the long run with you. I come into multiple funds over the years instead of over investing one time and then, hurting your cash position.
Yeah, and that's one thing that I've had, especially with a larger influx to things like commercial real estate and limited partner investing and pooled investment funds, is kind of explaining to people when they get into alternatives, is that, while, you're kind of used to on the stock market, be like, oh, I don't like what Tesla is doing today, buy. Really the education component is key in this, and understanding, saying, hey, yeah, there are a lot of benefits to this, but on the other side, look, say, hey, you're going to lock something up potentially for a year. There has to be a market. When you hit sell on a stock, it's not just, being bought by the ether. There's a market maker. There's people that are willing to buy this. And when you get down to more alternatives, there's less just people out there buying. Granted, the wait list is kind of fun that you have back there. But just understanding that, I think, is, again, a really good thing to have. Now, from the investor point of view, is this something where there would be the potential for capital calls, or their commitments, or are you just basically buying at a certain value and then there might be restrictions on selling it? But are there any kind of ongoing cost basis, like capital calls, or like equalization payments that have to be made in this type of asset class?
Yeah, so eventually we'll do capital calls. Like, for now, we've been doing things on like a deal by deal or portfolio by portfolio basis. And so once it fills up, like, we can't take more investments on, or you'd just be diluting everyone else. And another part of it is that, we'd like to eventually become a broker dealer and registered investment advisor. And so that way we can, then facilitate more capital calls and like have kind of open-ended funds. Just like doing it otherwise, you're again probably going to dilute people, and that's not what we want. Like, bringing more money on does not help us. Getting people the best returns is what helps us.
Yeah, absolutely. So great kind of front loading. Now let's kind of look at the middle of this. You said you like to invest locally in Chicago. I think that's always great. We love our, Florida market, and, any market for that matter. But when it comes to identifying, new places to invest, because obviously you're building a platform, so people come on and, they're saying, okay, here's what is on here, here's what's available. Is it kind of a meshing between people that want to develop a franchise coming to you looking to raise capital, or are you going out there identifying it and then broaching that topic? Or what's kind of the, idea behind, hey, here's, how we bring things onto the platform? Obviously, there's a secret sauce to that, dance around a little bit, but just kind of in general, how do things kind of make it onto the platform? Are you looking at certain markets, or are you just kind of following market trends and what you're looking to invest with?
Yeah, so there's a couple levels of it, and I definitely do have to do a little two-step dance, so I don't give away too much secret sauce. But
Sure.
We look from the top down. Like, we're looking at what industries do we like starting off? Where do we see long-term growth? What do we see that's Amazon-proof? What do we see that is going to be recession or pandemic resistant? Then from there, you dive further and you say, okay, now which brands in these industries perform the best? And what's great about franchising is it's all regulated by the Federal Trade Commission. So because of that, each franchise has to do a registration. It's called the franchise disclosure document. And with that, you're able to research a ton about franchises, who the leadership team is, how long they've been in business, the company financials, is there litigation against the business. A lot of them offer up how much locations make. And so from there, we can identify which brands we like the most. And from that, we can, we approach the brands, and frankly, we're filling a giant need for them. So we have had little to no resistance. And so we're then asking, okay, do you have any existing operators that are looking to expand to more locations or acquire other ones? Eventually, we'll do more of like the ones who just don't have money and are looking to start one. They call it's kind of like the Chick-fil-A type model for it, or Chick-fil-A only costs 10 grand to own because they're financing most of it, and it's a higher royalty for Chick-fil-A. And we see it as like we're creating opportunities that weren't there before. We're able to do that with them. So it'll be, again, combination of new versus existing, and all sorts of different types of investments as we continue to grow.
Awesome. Great. Yeah, that's one of the things I was kind of, curious about, because I see it from kind of two different perspectives. So it's more of an outward reach for y'all, not necessarily kind of franchisees coming in saying, hey, I would like to expand, or is there a component for that as well?
Oh, there's both. Yeah, no, we've gotten honestly hundreds of millions of inbound deal flow of people who already own franchises or prospectively looking to start some. They've got deals they're looking at. So they've been coming to us, but also it's like you don't want to do just like you don't want to hit adverse selection of like what's just coming to me. You want to go out and say what's the best available for our investor base.
Yeah, absolutely. I mean, it's always when you're putting together this type of investment structure where you're trying to attract investors in and then have a product that's viable, it's not just saying, hey, everything that came in and then sort through it. You want to gatekeep it to an extent, and also go out there and bring in good value to the fund, or again, not necessarily the fund is probably not the right word, but to the actual platform. Yep. Now, how long has this been going on, and were there any kind of roadblocks, whether it was biz dev related or kind of regulatory related, when it came to doing something so different in this space? Maybe talk about kind of the trajectory of what kind of, built this kind of thing to the point it's at.
Yeah. So, I built a pretty good brokerage over the years. So I honestly had the idea for FranShares probably 7 years ago. And I, again, wanted to really develop myself as like a thought leader in the space and a really fundable founder. And then the pandemic hit, and I read an article, people were gambling on the stock market because sports weren't on. And that was like my kick in the butt moment of like, okay, shut down the other business. It's time to get this thing going. And so, raised a pre-seed round that was venture backed. And then honestly, the time I raised it was literally just me and my background and a landing page I made. I didn't have a team or a product or anything. And it really showed that like how much they really care about your experience in the industry and your ability to grow that business. And so when raised that round and then built the team, started going to market. And it was funny because with a lot of these, you have to kind of do like a back and forth with the SEC. And there is not a franchise team there. So we'd been talking with the real estate team. And so you were talking apples and oranges. There was a lot of miscommunication and education process going on there. And a big part of where like, I'm hoping to develop more relations with the government and with the SEC, just so we can bring more opportunities out for individuals to invest in. And, when we launched, we actually had the largest launch for any alternative investing platform ever, with over 18 million in investment subscriptions. So honestly, it was living the dream. And so, we're in the process of developing these locations, and we've got openings, especially over the next month, like 4 or 5 different openings that are happening. And so, it's a really exciting time. And then, we're actually raising for the company again right now. Now it's we call it the seed round. And so once we wrap that up, we've got a lot of different opportunities we're currently and about to work on. And so it's been a great journey. It's been fast. Sometimes it's been slow, too slow for my liking, but it's been an awesome adventure. And, I was just at a investment conference in Chicago. They had like a Tech Chicago investment conference. And it was funny because like 2 years ago, I was raising for this, and man, I couldn't get the time of day from anyone. And now people are running across the room. They're like, "FranShares, I know you guys. It's awesome." And like, just people are excited about it. Like it's been great to see the trajectory of it all.
Yeah, no, it's I've been involved in the alternative investment space for most of my entire career. I mean, about 11, almost 12 years now, being, directly involved in, whether it's private stock, limited partnerships, everything from tech to real estate to chicken joints, to all sorts of interesting things, and a lot of stuff that is adjacent to that. And that's definitely kind of a tough thing, is having a good product and getting the funding needed for it. It's always kind of the ever present issue with doing this stuff. Now, with the regulatory issue, so you said you've kind of been working, with the SEC and kind of, again, they don't have a franchise department, so you're having to work with real estate. But are most of the things that you're kind of, operating under related to like, Reg D, Reg A with the Jobs Act? Is kind of like you normally fall under?
Yeah, they're all going that way. And so, originally we were trying to do a Reg A to get started. And again, there was just so much such a big learning curve for the people that we were working with there. And so we decided to start off with the Reg D, work with our accredited investors and institutions that we had, and then opening it up for retail investors pretty soon here. And so, it's been it's been a journey, and we know all the framework now. It's funny talking to new securities attorneys and platform providers and stuff. They usually ask me if I've been an attorney because I got these securities laws down the back of my hand. I'm like, nope, I've just been through a lot and I'm a good study.
Yeah, no, it's I get the same thing when I start talking. It's like, oh, you're a tax attorney. I'm like, no, I've just been literally reading this stuff for that long to where, I tend to remember a few things. Mm-hmm. So when it comes to that, so is the platform for this kind of thing only open to accredited investors, or is this something where retail can come in and actually invest?
It's both.
Okay. So I'm assuming that it's something to the point where you'll have kind of a gate kept, certain deals, qualify for the retail, some are open to both, depending on, what is actually going in there. Now, do you have kind of a limit for how many people are going into a particular deal, or is it deal specific? Or is there kind of a general thing where people can say, okay, well, I'm investing alongside X number of investors, or do you have to worry about someone coming in and being like, okay, well, I come in and now, I invested $1,000 and someone filled the other $1 million that was needed to be raised. Is there kind of a limit per investor? Or do you have to worry about how many people are going to be coming in or how few people will come into a deal?
Yeah. So, it's a combination of a few of them. We definitely look, it's interesting because I get asked a lot about why don't you just do the retail crowd or just the high net worth or institutional crowd? And so we like the combination of the two. It works best for this model specifically because, for one, in franchising, size and scale increases your return. So the bigger check writers are family office and private equity guys. That helps increase profits that way. But then the smaller check writers, that's your Reddit versus Wall Street crowd. That's people who are actually going in the stores, talking about their investment. And, unlike crowdfunding into artwork, you're not going they usually store that stuff somewhere in New York or California. You can't go visit it. And a lot of the real estate investments you're making, it's halfway across the country. And so something that's actually tangible and can be a part of your community is something that's never really been done in crowdfunding. And so, we're excited to bring this to both sides of the table. And so, like you said, depending on the type of offering can influence the number of investors that we take on. And, so a lot of times we'll typically try and open it up for maybe those institutions first to pre-fund it. And so we've got a good base set and we have an idea of the number of investors that we are allowed to have left. Some cases it's 100, some cases it's 2,500. So it really depends on the type of offering. And we're working on making more standardized packages, but there's always going to be special exceptions too.
Now, as far as, again, kind of to bounce back to the actual investment. So, you have two different levels of things. Now, what are kind of some of the price points? And again, I'm assuming that's probably deal specific, but is it kind of, demarcated on okay, the retail stuff is normally 100, 250. Is there kind of a range for what is kind of the per share, again, maybe not the right term, but kind of a per share price when it comes into doing these types of platforms? Because I know things like Fundrise are normally it's $100, $200 per entry. Is it something similar to that? And is the accredited stuff 25 to 50? Kind of give a price point idea and how that's done, or if there's kind of any uniform nature of that.
Yep, we have a law that rules all. It's the minimum is $500. Okay. It applies to both retail, high net worth institutions, and honestly, it was funny when we were doing the Regulation D and working with accredited institutions. The minimum's still 500, and I didn't think anyone actually would do 500, but we actually had a decent amount of people who were I want to test this out and see what's going on. And honestly, I have no problem with that because as I usually say, we're not here for one big check from someone. We're here for your investment career. And so test us now, you'll be back later and you'll keep coming back. So but our average intended investment for those who've signed up on our wait list is about 13,000. And so time will tell how much that sticks. It was closer to 30 or 40,000 for the last portfolio, but as we add more people on, I'm sure it'll stabilize. So it's a very wide range.
Yeah, and I would think that the proof of concept for investing $500 is a lot more apparent than investing 50. It's easy to say, okay, I gave you $50,000. Yeah, you did something with it. It's a little bit easier to think of someone being able to do something viable with 50 versus being able to do with something with 500. I think is a little bit better of a proof of test. It's like, okay, 500, a lot harder to, drive something with 500, but again, comes into scale and everything else like that. Now, would there be a particular maximum that anyone could invest in one deal again for that dilution, or is that all kind of deal per deal of that?
Deal per deal, but also honestly, as long as it's not taking us oversubscribed, there typically won't be a maximum. Yeah, it's
Yeah, gotcha. And are there any industries that y'all either find, again, just inherently problematic or just steer clear of in franchising? Or are you just kind of open to whatever kind of, will make money and be a viable investment? But are there things, I guess maybe the better question, maybe not specific to you, but maybe kind of, since we're getting, towards the end of our time here, just problematic areas that you've seen maybe that were, once good that are now kind of drifting into not the greatest areas of franchising, or is again, just kind of depends on the company, things can fail in any industry, but maybe speak to that of things for people to watch out for. And the nice thing about investing on this kind of thing is that, some of the due diligence is being taken care of for people. They're being provided a little bit more of a polished platform, but again, kind of the issues in the market and things to maybe stay away from were problematic areas in franchising.
Yeah. So, it's funny. I get asked a lot of questions about this new hot industry, whatever it is at the time. And I tell them it's franchising is not about creating industries. It's about consolidating industries. So we typically don't like industries that are too new. And we also don't like brands that are too new as well. If they've got under 100 locations, it's something we're open to it, but it's going to be further down the road. And it's also just like how we talked about, there'll be different products for different people. This is risk tolerance. Some people are hey, I want something that's got higher upside. And so they might want to look at a smaller brand because then you can get major markets versus if you look at a big brand like McDonald's, you're not getting anything in Chicago. And so, it's going to vary a lot on that. I also, we like food, but we don't love food. There's specific brands that we like because it's a tough industry. And the reason people know, and both saturated and the reason people know fast food and franchising synonymously is that it's the most competitive industry out there and you have to market super hard. And so, we try and think what are unique value propositions that companies have within those industries. Like a brand that we've been working with, they don't do for that class A real estate where you see a McDonald's everywhere. They focus on pickup and delivery. So they'll take a class B real estate and it allows them to have a smaller footprint, smaller startup costs, and be able to grow from there. But I truly love service related industries. If you're looking at automotive, hair care, fitness, we do waste management, the margins tend to be a lot higher. There's little to no inventory. And oftentimes there's a lower employee count. Just again, they're not always the sexiest industries. I could show you a screen door repair franchise that will make you a great 6-figure business. But some people are well, I want the big shiny golden arches. And so a lot of times it's about getting people to kind of suspend the ego. And it's hey, we can find you great franchise businesses that provide good returns, but you should be really open on industry.
Yeah. And so to kind of that point, one of the, anecdotally, kind of coming into my career of alternatives, I understood real estate, it's 3-2 blocks, commercial real estate. I understood that kind of on a fundamental level, but the most surprising thing I ever found to that screen door analogy is mobile homes. I never realized how much money those things literally, I think they all come with a money printer in them, because I've never seen people make money in real estate like I have with mobile homes. I've seen people, I saw a guy in rural Georgia, nothing near it, took a 9-pad mobile home, little lot that had 9 pads on it, replatted it, redivided it, tripled it for the pad space. So he went from 9 to 27 and then would bring trailers in, sell them on retail installment contracts. Then, so he'd owner finance it. Then he would rent them out to the lot, foreclose on them if they didn't pay. And he made $1 million in 4 years and his IRA doing it. So he didn't pay his taxes.
Yeah.
So I think, again, that would be a really good kind of point into that. again, the big sexy stuff is great. It's big and sexy, but the margins and the competition are there for a reason, because that's what kind of makes these things so attractive. Everyone wants them, but things like screen doors, or talking again anecdotally to the franchising, the crime scene cleanup place too. Like there is money to be made everywhere, and I would much rather have a big fat check than a big sexy golden arch. The money is great. You can go buy your own McDonald's franchise by investing in the ones that make you a lot of money if you want to. But besides that, maybe kind of since we're kind of coming in for a close, what would you say some of the most surprising things that you found being in the franchise industry? I know I kind of framed that question to the last guy I talked to, but was it the competition or lack thereof competition, the ability for you to kind of come in and change things, or just the nature of the business? What are some things that you really said wow, I didn't realize this coming in? What are some big aha moments that you might have had?
So many of them. So one I kind of started talking about was just like the amount of different industries it covers. So I thought it was all fast food, and I mentioned I started off in franchise brokerage. That was part of a franchise. There was a franchise for selling franchises. It sounds insane, but it was an amazing industry. And frankly, I'd probably still be with that group if they had the territory available where I was at to buy. I was working for another franchisee, and they're like, "Oh, you can go to Nebraska, I think." And I'm like, "Nah, I'm okay." And sorry, Nebraska listeners, my bad. But then I'd say the other part is how many there are, like brands in general. Like there are more franchise brands out there than there are stocks on the stock market. And so it's like when people really don't understand like how big this industry is. And frankly, like it's kind of like when you are thinking about buying a car or something and you've got this brand in mind and you start seeing it everywhere. Same thing happened to me with franchises. Like anywhere you drive, whether it's like a strip mall, I'm like, those 5 next to each other are all franchises. People probably only think that one is. And then also like you'll see like things in the street, like a Serve Pro truck, and they do like damage restoration. And so you'll see these trucks everywhere that like people think just a random business. I'm like, I know that's a franchise. And I know a lot about that company actually. And I think also just the different types of people in it. You've got everything from like private equity, institutional capital, all the way to your mom and pop busting their butt to make their dream happen. So it's just I'd say all the things that you didn't know about it. It's really interesting. And finally I'd say actually I had a pretty good list there. I didn't need to add another.
Well, I think I do really appreciate your time today. And I always, again, really enjoy talking to people that do things in a new or interesting way. And the few that kind of pop up, one of them was actually talking to the people at Spalding Decontamination, because she was, the CEO of that company that started the franchising was, started as a cop. They were going to all these crime scenes. It's like, oh, well, she's like, who buys these or who cleans them up? And like, no one. The owner has to deal with it. She's like, all right, well, no one's doing this. Made a bunch of money, was like turning around and flipping meth labs, coming in, doing the remediation and murder scenes and like suicides, all this kind of crazy stuff. And, building a franchise like that and, getting to talk to people that have, new interesting concepts. It'd be weird that the two pop up that are kind of at the top of my list would be franchise related. So
right.
Again, I do really appreciate you being on with us today. Kenny, if they want to find out more about your company and what you're doing, where can they find information online? Is it just franshares.com or?
It sure is. Yep. franshares.com. And I always encourage people, add me on LinkedIn, mention that you were listening here. Always happy to like build the network and get to meet the real people interested in what we're doing.
Absolutely. Well, thank you very much. Again, this has been an edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and thanks for joining us.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.